So today we're going to talk about some bad news. We did get some bad news on Friday, and I'm going to talk about that and show you guys what that means for the stock market going forward. So only a couple of days ago, I basically talked about a stock market recovery. What would we need to have a continuation of this stock market recovery that we've been on since really the kind of start of May time? We've been in a bit of a stock market recovery. There's a lot of cash on the sidelines, and some of that cash, people coming into them risk on stocks a little bit more or buying back into the stocks that are really beating down at the moment. And we saw the signs of a recovery, and I said that potentially this is what we need and what will happen if we do get the recovery and how quickly stocks would rebound. But at the time, as I said in the video, that's short term, and anything can happen in the short term, and it is on a bit of a seesaw at the moment, and it could easily still tilt both ways. Unfortunately, the news on Friday does mean that we've tilted a little bit more into the negative direction, which is not great. So I'm going to share that with you and the bad news that we got on Friday. However, what I will say is that obviously I'm a long-term investor. I always have been a long-term investor. So in the long term, this doesn't mean anything that will change my investment strategy or the stocks that I'm buying. I will still continue to have a long-term hold on them stocks. I just think it's good to kind of talk about the short term every so often. Obviously, we generally don't know what will happen in the short term. It is very much 50-50, but we can have a bit of a educated guess on where we could see it going. And unfortunately, the news that we had on Friday was bad news, and then with it being that bad news, obviously some of that actually did get priced in on Friday, but it could slowly kill off some of the momentum that we potentially did start to have. So we'll get onto that. Just a little bit of a shout out. If you're not on the Patreon, make sure you join. Link is in the description. But if you're on the Patreon, we did drop our second exclusive video on there, which is the stock request. So this is where the members of the Discord can vote for free stocks, and I take a couple of minutes and look at them and give my thoughts on if I would buy them, if I'm not interested in them, and if I was to buy them, where potentially I could buy them. So yeah, we did Starbucks, Roku, and Dunelm. So if you're on there, do go check that video out. But we'll get stuck onto this. So like I said on Friday, bad day. You can see here the Dow was down 2.7%, the Nasdaq was down 3.5%, S&P nearly down 3%. A lot of stocks got hit absolutely hard on Friday. And why did that happen? Well, unfortunately, the reason why that happened is inflation data. The inflation data came out, and it was not what we wanted. So we expected, I think it was a 8.3 consensus, so it was supposed to be a flat month over month, what we wanted to see. Unfortunately, it was higher. It came in at 8.6, which obviously is much higher than what was expected, and in fact it actually went over the top of what we had in March time, which is not positive. So it was higher than what was expected, and even the highest number so far. And while we're in this 8% range, it's incredibly high, which is worrying. And obviously the knock-on effects of inflation is obviously interest rates, and interest rates going up as well. So it's not great at all. And everyone was kind of starting to get into the markets thinking this is potentially where we see this kind of slowdown in the inflation data. The reason why people are gambling, or why people were starting to take out a little bit of a risk on this inflation data, is that historically it says that when we peak in inflation, which you would expect it to happen any time, being at these sort of numbers, I mean it's incredibly high and we can't keep going on up at these rates forever, is that when we do generally reach a peak in inflation, the next 12 months return something like 10% on average. So history says that when we peak in inflation, we generally do have a good bull run. So yeah, everyone was kind of thinking, okay, we've had 8.5, if we get 8.3, even if we're at 8.3, 8.2, obviously that's kind of bullish. But now that we've slowly had inflation move back in the wrong direction, that's what everyone was nervous about, because everybody was kind of thinking, okay, I want to be ahead of the game here if we see inflation still moving in the right direction. And especially right now, why stocks have been bouncing so hard is because there's a lot of cash on the sideline. If you look at the moment, with the Nasdaq, for example, down nearly 30%, a lot of that cash is sitting on the sideline. So at the moment, that's burning a hole in a lot of Wall Street's pockets. They want to get that cash going back into the market somewhere, and especially in this beaten down market, they want to be the first ones in kind of this rebound. And that's why a lot of people are gambling on this kind of inflation data. And unfortunately, this inflation data was not what we were expecting. And obviously at the moment, that's obviously going to knock probably the rebound back slightly, because that's what we were hoping for. So not great from that point of view. And obviously the knock on from that is going to be the interest rates, and that's what the market was hoping to set up for, is that kind of rebound and get in there. But unfortunately, that hasn't been great there. So yeah, that could obviously put a bit of a negative effect on the market. Obviously on Friday, obviously that's priced a lot of it in, but potentially that could potentially kill some of the momentum off. We'll see what happens going forward. So yeah, that was the bad news that we had. Yeah, it wasn't great. However, key points that I am going to make going on from this is that when I talked about that stock market recovery a few days ago, it did really get me thinking about the whole situation. It got me really thinking about, well, you know what, if this is the peak of the stock market crash and today is the tipping point and we actually move back in the right direction, I was actually a little bit disappointed because I looked at a lot of these stocks and thought, you know what, realistically, we've only had the stocks down at these really low down prices for, 2-3 months now. We really didn't kind of hit this bottom really for the last kind of 2 or 3 months, and in some stocks they've only actually been down here at the kind of these dumps these really bad levels for maybe a month or two. So realistically, to carry on building positions at the moment, these prices need to stick around here for a while to get those averages down, to capitalize and buy as many cheap shares as possible. There's so many opportunities out there at the moment in the stock market. I looked at that situation and thought, you know what, if this is actually the bottom, I'm a little bit disappointed because I've not had that long to kind of make sure I keep as much cash coming into my stockbroker's account as possible and keep buying the dips on these stocks. This is one of the golden opportunities in a lifetime to buy amazing companies at unbelievable valuations. There's so many opportunities out there at the moment. And while these stocks are down on these opportunities, I need to be buying, and the longer they can stay down here, the actual better. Especially if you think even longer term. If these stocks stay down at these sort of prices for the next 12 months, not only is that actually going to give you more opportunity to buy more shares in that business and accumulate more shares at a great valuation and bring your whole averages down, and then when we do rotate into more of a bullish economy, a more bullish stock market, them shares are going to do absolutely amazing. But as well as that, a lot of these businesses at the moment, there's a lot of businesses that sure are getting hit by this sort of situation that's going on. However, there's a few companies in there in this list, or a few companies that have been have lost half the value on the share price, and a few of these stocks or businesses are still performing unbelievably good. And if these companies stay down at these sort of share prices for a longer period of time and still the financials keep improving, you're not only getting a longer time to buy these companies at really good valuations, but the business itself is going to be improving a lot over the next 12 months. So if it stays at these prices and the business carries on improving, in 12 months' time, you're going to have a great price of a company that hasn't changed. And as well as that, it's going to be even better than where it was 12 months ago, which is just a complete winning situation. Them sort of stocks that come into mind are like DraftKings, a company that was doing 700 billion in revenue, and now it's going to do 2.1 potentially 2.3 billion in revenue. A company like Hims that has grown over 100% in the last 12 months, and it's gone from losing like 60 million a quarter down to 10 million a quarter. A company like InMode that has doubled its revenue, doubled its profit in the last 24 months. There's a lot of opportunities out there. So the longer it actually stays down here, the better, because if you imagine overnight, let's just say we start doing the stock market recovery, what are you going to be doing at the end of the day? Well, you're probably just going to sit back then and enjoy the ride, enjoy your stocks going back up and seeing that share price appreciation start coming in, and all you're going to be doing is probably sitting on capital, and you won't have anything to buy. So rather than being in that position, the more you can use that capital now to capitalize on these opportunities, like a CV situation all over again, the better. This is really a big, massive wealth building opportunity in here. And sure, as always, the dips can be painful. It can be awful to see stocks that you own down a really big amount, but in the long term, there's a lot of these stocks that aren't going to stick down here at these sort of valuations when we have a bit of a cycle, and that cycle will happen. We can't stay in a bear market forever. We have bull markets, we have bear markets. the cycle always rotates eventually, especially if the business is financially performing very well, as a lot of them are doing, and yet the share price is over half. So yeah, just thought I'd talk about some of the bad news that's out there at the moment, and also what it means potentially in the longer term, even better opportunity, which is really key. So yeah, I hope you enjoyed the video anyway. A little bit of a short one, but just wanted to talk about a bit of mindset and just some I guess bad news out there at the moment. So hope you enjoyed it anyway. Hit the like button. If you're new, subscribe, make sure you do it, and I'll see you in a bit.